Hey everyone, welcome back for regular viewers and for people that are new, check out the education channel, otherwise you will not understand half of what I am about to say. We have a lot of closes today, some big ones, some really important ones. There's a key level for Bitcoin which could flip pretty bearish pretty fast, so we want to make sure we close up over a certain level. We've had that pump, so I guess everyone is probably feeling like, hey, we're back and a little bit bullish, but yeah, we'll check out these charts. We'll see what they say. The crystal ball thing from yesterday about how we had the perfect size candle to build the daily range on Sol, that actually looks like it might be what they are going to do. So yeah, we might get our reversal. Okay, so let's start by looking at liquidity. Okay, so just like when we started falling down, there was, liquidity for shorts was left behind, and the same thing is possible for longs. There will come a time when they basically say, "Cool, enough's enough. Let's start pushing it up," and you'll get a fast move to the upside. And yesterday, what I said was we had a perfect size candle to create a daily range on Sol, and what we would need is we would need a short squeeze because the close that we had yesterday basically just was horrid. It just kind of stuck Sol in an area where it was kind of sandwiched between support and resistance, and there was no way it was ever going to get out of that unless it literally just went on a short squeeze. And because it's kind of the only way to push price up effectively and break resistance is to use someone else's stop losses or liquidation triggers to just move it up the path basically. So we've had that. We've had the first thing. And what we're sort of seeing now is we're seeing some people are chasing it. And if too many people chase it, then yes, it could have a dive down. It could sweep some of that liquidity before it goes back up again. If not a lot of people chase it, then it may just keep going. So looking at the higher time frame sort of liquidity over here, we have got, Sol has popped in sort of 37 down to 33. So it would make sense to go and grab some of that. So we'll be watching out for that just after close, or maybe even before close. We could get, we've got a couple hours to go, so we could get a bit of a sweep down, sweep back up, still get a good close. Now, all of the higher time frame liquidity that sort of starts around that 141 area, and remembering 141 is like a weekly origin level that basically we've closed underneath. So it's also not exactly a easy level to get back above. But if they go on another squeeze, and if we get enough short-term liquidity piling in, so a little bit of a pullback, everyone starts to short, they think, oh, cool, another local top, and then it could go on another squeeze to push through that weekly level. So yeah, we'll just have to see how it plays out. We haven't hit the key level yet on BTC, which is 93,570. And just kind of looking at the short-term liquidity, it just doesn't really exist. Like it just wouldn't be that efficient to go and push up to that price just yet because it's just a big blank gap. And if we look at it on the higher time frame, it's basically hit that point of about the 92 again, and then it's pulled back from there. We still have a pretty big gap sort of between 92 and 93,700. So it'd be good to sort of see a few more shorts just popping in the next hour or so if they are going to indeed continue to push up quickly. So it doesn't mean we're not going up, but it's just not so efficient to be doing it at exactly this moment. If they were to take a sweep to the downside, then longs have piled in from about 90.5 all the way down to you've got some 100x leverage that has basically been let to ride down here in that sort of 88 area. If this is the start of the proper reversal, and we've got those levels, that we should be heading to up to 95. We've actually got levels up to 108, to be fair, that we should be heading to eventually, and all of that is represented on the higher time frame liquidity. And we've got all these levels up to 164, 161. There's some stuff around 157, that we should be going to on Sol. So, it can kind of happen any time at this stage, but we'll see how these closes go. Let's check out the charts. Okay, so starting with Sol BTC on the daily. So yesterday, I think, I can't remember if we actually had just touched this level on yesterday's video or whether we were talking about how we are heading towards this level on yesterday's video, but we have hit the level. So we managed to hit the daily support there at 14552. Now the bounce that we've had off that has taken it all the way up to the second level of the range. So that's pretty bullish. It's pushed it back up inside of the prior broken range. Next step is that there's going to be some kind of interior trend. Now, if this can actually have just another little pump prior to the end of the day, it will be in a position where it's over top of the trend, and it then could actually, open the next candle and then continue to move up. As it currently stands, though, it'll probably create this interior trend if it closes where it is now. And if the wick is this long on that candle, then the next one will have a pretty good or high probability of rejecting off it. So you might see some weakness come in at the opening of tomorrow, just based on that. Now, what it is doing, though, is it is creating another hold level. And because it's creating another hold level, that weakness does have some kind of support. The size of this candle and the size of this engulfment is also capable of creating another range. If it closes over this 15076 level, then it's already technically above the new range base, and it may use that to try and break this trend and actually get through these trends. Now, if it does break both trends at the same time, then you've got basically two condensed trends that, if they get broken by a single candle, can actually create a more aggressive pump. So this kind of structure actually is looking like it's short-term bearish because it may reject, but the way it's getting created is got the potential of being a bit more longer term. So over the next few days, longer term bullish if it breaks those trends now. In other words, breaking those trends now after this kind of close is actually more powerful than it would have been if they'd broken them today. Okay, so looking at the weekly. So the weekly there's not really too much to say there for the weekly. It has not really lost or gained anything is probably the best way to put it, because it never really lost the support trend because it was on it when it went underneath it. This candle can't really be the one that breaks the downtrend. So yeah, it's really kind of a nothing. And looking at the monthly, it's bouncing off the monthly support trend, so that's probably why there's quite a bit of strength in there. And looking at the 3-month, it's bouncing off the 3-month support trend as well and off the 3-month hold level, so that's also why there's probably a bit of strength in there. Okay, let's have a look at the safety assets. Okay, so it's a bit of a tough chart to gauge on the daily. So we had that pump in safety assets yesterday, which was that big dump that we had across the alts, the final sort of hurrah. But then what's happened during the new day is that we've hit the trend to the top side. We've rejected back down. And that's also technically a origin level that dates all the way back there to July as well. So it's also a range level. So it's the halfway point of the range that it's trying to create to the upside. So if it is going to fail, it's going to fail off this level, right? If it closes above that level, it's more likely to continue up, and if it closes here below it, it's more likely to fail. So if we get a close down here around that 68.2 sort of level, then we've fallen back inside the prior distribution range as well. And we could then continue to push down, we might go back underneath the prior broken trend as well. So it's a bit of a hard read because the next candle could be a yellow candle, and if the next candle is a yellow candle, then we might end up breaking the interior trend and then challenging the exterior again. What we kind of want is we want a day where we don't touch that exterior trend again, which basically means that we rejected off it and the price has not been capable of going back to hit it again. Because of that, it's a strong trend. The sell pressure is so great and continuous, or in this case, the dominance is so great and continuous that we're going to continue to see safety assets flow into risk assets. Okay, so that's what we're seeing here. Yeah, outside of that, yeah, it's still got potential to flip tomorrow, unfortunately. Looking at the weekly, so the weekly hit the origin rejection level, it's pushing back down. As long as we don't engulf this prior week's candle and therefore try to create structure to the upside, this has got the ability to head all the way back down to about 67 before it finds that new trend support. So might just put an alert on that, because if it goes down to that 67%, where would that be? About 67.3 or 67.4%. If it goes down to that level, then the bounce of that could trigger whatever retracement we see next. Okay, and the monthly hasn't got back to its resistance level yet. Monthly is just kind of in the middle of nothing, so won't worry too much about that. Right, let's have a look at the totals. Okay, now that looks like the kind of candle we want to see on the totals. So this level here at 2.58 trillion. So this is totals excluding stable coins, so BTC and everything else, but just not stables. This level becomes a origin reversal level, or an origin, just an origin level, whatever you want to call it, as soon as this candle closes. Now, if this candle closes and engulfs the entire wick and body of this candle, then this candle is capable of creating a range. That range would have a midpoint of about 3.1 trillion for sort of a retracement. And that kind of lines up with this prior range up here. But the thing is, this range is all being tested. Okay, so we've created a whole candle. We've wicked into it with this blue one. We've continued down. We've even wicked up into it with this next one. So that's also quite, that's quite a tell sign that that range may not be very strong anymore, or may not actually stop the price. Now, nothing much down here is actually nothing down here is untested either. So the first kind of untested range in this entire thing is when you get up to this one at about that 3.32 trillion. And that happens to be that third level. So this is almost too perfect, like as far as how these levels line up. The 2.89, the 3.1 probably don't have any real resistance on the overall. We have the trends that we've got to get through. But as you can see, there's a huge amount of condensed trends. So if the next candle can get up over this level, break through these trends, then it's pretty much almost a resistanceless air gap all the way up until you actually get to that 3.32 on the daily. So that's pretty good structure. Now, when you get up here to the level 4, there isn't. I mean, there's this origin level just fractionally below it, which is at about 3.52. So maybe it'll wick into that. Maybe it rejects just before the level 4 is achieved. So just be careful of that. It could be. So what I think it's probably quite smart to do is put either this, which is 3.32, or let's just target this break. So we're going to put an alert on this break. And any kind of pump we have, once we hit that level, we want to be very, very cautious. And the other one is this level, which is going to reject. So you don't hit a range top and generally not reject. You might work through it, but that's going to be some kind of range top. Okay, so we might have some pretty bullish levels starting to form inside here. Now, the bearish side of things is that we still haven't broken the exterior trend or all of the interiors, because there is just a ton of stacked trends here. The next trend is going to be just fractionally before that 3.32 or 3.31 area. So you may also pay just to run that trend, which is from here to somewhere. Actually, sorry, it's back there. From there. So these candles are from the 5th of October and the 8th of October. So probably worth just having an alert on that one as well, because something in there could actually cause a reversal or rejection to whatever the move is. Okay, so let's have a look at this on the weekly. So the weekly doesn't really say all that much. We haven't actually, this is where it gets kind of interesting. The total market cap for crypto has not actually lost the weekly level. Now, some individual tokens have, and as to whether or not they can break back through those levels, a lot of it is going to be determined by the fact that the overall market is capable of breaking back through those levels. So it's still got work to do. It still needs to continue up. It still needs to get back above all these trends. And the biggest challenge is probably going to be this steep range trend that's coming through here. But it is not creating an origin support level. Basically, it's just testing the very bottom of the weekly range. And so far, it seems to be getting a bit of support there. Okay. Let's see what's the monthly. And bouncing off the monthly base, got a range trend. Nothing's hard closed until you get up to, well, yeah, nothing's really hard closed until you actually get back up to 3.76 trillion. So this is very, very, very interesting. If the reversal actually kicks off now, it's in a pretty good place to keep going, at least to, that 3 area. I don't want to say all-time high, but to be fair, there's a close today for BTC that can send it to 74.72 or 105. So we'll get to that when we get to BTC. All right, let's have a look at Sol. Okay, so Sol hasn't created a new daily origin, but it has bounced off a existing daily origin that was created from what day was that? 21st of November, when it hit this level down here, which was 123.436. So now I said yesterday 123 was a target and not technically a support level, but based on this, it appears that it might be becoming one. So what we want to see happen next, and we talked about this yesterday, but what we want to see happen next is we want to see either this close or the next close be over the top of 140.260. Now, if that can happen, then we can start working our way up through these range levels, which is your 150, your 161, your 172. Now, they have confluence with like this range break up here at the top of the range at 172. We have this hold here. Now, if we consider these two candles or this entire range, they swept the liquidity back into the range using this candle here on the 12th of November, which lines up roughly with where that 161 target is. So there's a bit of confluence with there would be orders and resistance above the wick of that candle and before the wick of this one. It's a fair value gap, as people like to call it, and that sort of lines up with your level 3. And then if we look at level 2, level 2 doesn't really have any immediate obvious structure here, other than the top of the fair value gap that is in this candle, which does pretty much line up perfectly. And not really much over here. No. So level 2 doesn't quite have perfect confluence with much, but outside of that, level 3, level 4 actually look pretty good. So if we get a rejection off the trend, they could use that as a sweep. It's kind of all got to happen, like everything's really got to start happening quite quickly now. Like if they want this to actually become a range and they want to take out longs that may be chasing this pump, they sort of have to do it like a quick down and a quick up, right? Because going down, staying down too long, it doesn't create the range anymore. It doesn't get over the top of the levels, and then you don't have this continuation up through that high time frame liquidity. Doing it quickly, particularly with tomorrow being a prime day, yeah, absolutely, they could just sweep on down, take everything, bounce back up. The other thing we want to see is, if this is going to get continuation, is you don't want to see them revisiting 127.487, because then 127.487 becomes the origin that created the hold, which created the range. Okay, so it is possible that the whole thing started with the 123 area, but ideally what you want to see is you want to see one that gets created along with the range. You don't really want an older origin to be the origin of a newer range. That's kind of like what happened in these candles here, which ended up getting fully retraced. You want to see a new one get created, and it can only get created by the following candle not coming back to 127.487. Okay, so that's our daily. So 2-day close looks like we are getting an engulfment. If we can stay away from that 127.487 level, then we get an origin. We do want it to engulf the wick. That's just being cheeky, really. We kind of want that to happen. If we can engulf the wick on this, then we've actually got a 2-day range getting created alongside our 1-day range. But hey, let's not be too picky. We'll just take it as it comes. If it doesn't engulf the wick, then there's still upside targets that come into play there. You're probably going to run into something around here if it starts to move up, starts to pump. So this whole candle here from the 9th has been, the wick has been tested, and that's caused the dump. That may be enough to have invalidated it. In a really bullish market, that is going to invalidate it. And then, your break level is straight into the 170s. We've been saying for a while that these 170s just, they're numbers that keep showing up, but they really are numbers that keep showing up. This may be invalid, but it could also trigger a rejection. So let's just talk about it anyway. From about that 157.9 or above, back down to 150. Okay, so you might get that retrace like coming in there. 164, which is the halfway mark of the candle. And if we were to take the time to refine this, we might find that 164 as a level. And the reason that 164 might be a level is because 164 is the 86-day target, right? I think it's 86 days. So where are we? I'm just looking on my other screen at the moment. 164.996 is the target of the 86-day time frame. Okay. What have we got? We've got 3-day. It's back up above the interior trend. It's completed its long. So this was the tap of that 140.973 just there. So that's done. You can wipe that one off the board. Minimum obligation is complete. This is actually capable of progressing on to create a range, but as you can see, we had that problem where it closed under the range level of 143 the last time it closed, which caused the retracement back to test the range base. Now, it hasn't, well, range hold, sorry, I should say. This is the range base, 143. It hasn't actually lost that level. So this is capable of, next, can't do it in the next candle, but the next one could get above, the next one could hard close, and then it could continue moving through the various levels of the range. And it's good. It's got good confluence with the level 4 of the range being the hold level at the top of the distribution. So that's like a complete reversal of distribution if it gets all the way up to 183. But let's just not get ahead of ourselves. Don't have a range yet. And the 4-day. The 4-day is bouncing off the origin level, which was created on the 21st of November by this failed distribution. It's back up above all of the trends. It's a pretty bullish place to close the candle. I mean, the only way you could make that more bullish is to get above that work. That means a close over 144 by the end of the day. This candle has been entirely tested, so it's probably not a lot of resistance in there. And then you got a break of the range in the 170s. Okay. The 6-day close is a little bit of a downer. So you want that to go up just a little bit and get up over that trend so the next candle can open over the top of the trend. Now, this is 50-50, okay? And for probably, I don't know, how many weeks now, every 50-50 scenario has gone the bearish direction. And that's just because they wanted to drive the price down. We still have got targets. So there's a few bearish targets left. Okay, so total high time frame, high probability, say that 3 times fast, moves that exist in Sol for 2025. There's 165 moves in total. Okay, there are, let me just check how many are incomplete. Okay, there are 3 that are incomplete. So one of them is down to 111.6, one of them is down to 120.827, and one of them is down to 108.412. Now, it would be really nice not to see 108, because 108 could trigger a 2024 move. So we talked yesterday about like the cold hard truth, and that's that there is a 4-month move to $14. Okay, and that's a super bear market crash type move. So there is an incomplete 12-day move, which has been incomplete for, I don't know, 8 months. And it could take it to 108. Now, if it does go down and hit that and complete that move, and just percentage-wise, you're talking 3 that are incomplete out of 165. If it does complete that move, then, and it does it in December, and it stays down there, it's stuffed. Okay, so that's because then that 4-month thing is really likely to kick in and send it down. Now, if we can stay away from there, then it can be left behind, and it can be left behind for another year, for a week here. We don't really care. So we just, we don't really want that move to come into play unless we catch it. And if we do catch it perfectly, it's going to be the best short you've ever seen. Okay, so this one, it would be nice if we actually move back up. Now, if we could even just do, where would we be? A close just over that 140 area at the end of the day means we're definitely going to be above the trend. We're not breaking the downtrend, but we just want to be above the support trend. Ideally, we don't want to be in a 50-50 scenario in anything, because if we are, then there is still the chance that, hey, if too many people chase this, they'll just nuke it again. So that's where we're sitting with the 6-day. Okay. This is the 7-day is in between the 2 layers. So we want this to get, kind of the 2 outcomes here are, we either want to close over 140.254, which means we have not lost any of those upper ranges and we can continue to the upside. in which case we've got this monster hold candle sitting up here, and it starts at about 177 and goes through to about 185 for the different greedy, really bearish through to greedy areas, beginning of greedy areas. And the break level for that entire distribution range is 201. And the trend is miles up. So we kind of want to either close above that 140.254, or we at least want to close in between these two layers as a accumulation candle. Okay, so that means closing over 138.904. Because closing in here as an accumulation candle does not break the upper level, it doesn't create resistance from it. It's just a case of next time it's got to go through it, right? So that's what we want to see on the 7-day. Pretty much the same thing goes for the 8-day. So none of these 8-day levels are technically, or this 8-day resistance level is not hard closed. This one's pretty important because this whole thing started by the loss of an 8-day range trend on that October 16th candle there, which the October 10th week got us below it, and then we lost it that next 8-day candle, and then ever since then we've just been basically dump. So why do I not have that trend on my chart? Yep. Where'd you go? Probably because it's been broken now, but that was it there. So we're up above it. We hard close it here, and down it goes. Okay, so what we want is either just to close an accumulation, or it would be very bullish if they push this price up and close over 141.350. All right, that means they mean business. They want to go up and attack the upside. We still have some incomplete range moves in here. We haven't hit the overall break level. It's a good place to recover. It's a good place to recover if it does continue. Okay, 12-day close. Same sort of thing. We want it to close an accumulation. It probably will, just because it started down so low. It's not going to create a range or anything because it's just it's not engulfing the prior candle. If we close over that 140.731, that would be even more bullish. There is a trend here, and the next candle at this stage is going to, so if we just chuck our horizontal line here, just where the next candle will open. As you can see, it's going to open just technically to the underside of the trend. The candle will actually be on the trend, so it's kind of a 50-50 scenario. But yeah, you could get a retracement. You could get a bit of action between these two levels, the 133 and the 140 level again. It is a prime day, so anything can kind of happen. But at least if we close an accumulation, we are not hard closing any of these upper resistance levels. And then we've got a hard close level there at 161. Surprise, surprise. That kind of lines up with the daily, doesn't it? I think 161. Yep, there you go. 161, level 3, and 12-day hard closed resistance 161. Okay, so that should mean that they're working their way there. Okay, and let's check out the 14-day. So 14-day, you really want to see it flip into accumulation. It is, to do that, it needs to be over 140.582, which is pretty achievable. Now, if it doesn't, then we are hard closing these trends, and they're sort of in that 150 area. That would make a bit of sense with the daily range, because we had that 150 level that didn't really have any huge type of resistance. Like, it had a fair value gap and that was about it. But if we do leave this candle as distribution, then that gives us our 150 resistance. to have to try and fight our way through. It also gives us 145 as a potential rejection area. And this is total prime day stuff here, because if this stays as distribution, we could reject off the 145 or off the backside of the range trend or trend there at about 151. We do have a range base at 161 as well, and that range base is hard closed. So maybe the daily range only gets to the 50%, and then it could push down from there. And it hasn't tested, or it hasn't touched the 120 origin level, and we have got the 120.827 target is one of the 3 outstanding short targets that's left. But it also would probably go through that, because if it is going to move between that range level, it's typically going to come down to this range level. If it wicked through that range level, then it's going to be the first touch of this created 14-day origin down here at $100. Okay, so it's absolutely possible that if this closes in distribution, we could get a bit more of a pump into resistance down to test some of these levels. If it hit 100, it's completed every single short that exists for 2025 that's listed as a high probability short. There are other ones, but they're not technical high probability ones. Okay, let's have a look at all of these obscure timeframes. Actually, let's check out the weekly. So weekly is pushing through trend. It's pushing into resistance. Doesn't mean much because it ain't closing today. Monthly has nothing hard closed until 190. So again, doesn't mean much. But just to note, it hasn't actually hit that 120.487 origin level. So, the short target that's still in play. Actually, heck, one of those short targets is a 14-day short target as well. Let's just quickly go back to that. What is that? Where is that from? Is it that? Yeah, it is too. Yeah, so we've already got the 14-day time frame trying to come down here. Yeah. Can't see that. Tapped there. Sorry about this, just double checking this. No, it's not that. Must be this. Must be that little reversal, that cheeky reversal from the bottom. Yeah, there it is. Yeah, because that one's not technically high probability, two engulfing one. This one, on the other hand, okay, so when this was created down here, when we had that reversal for that range, they did this entire engulfment. They went back up. It didn't go up, down, up, which is what it would have needed to have actually completed this move. So yeah, that 111.6 level is still technically in play on the 14-day. Now, why would they go to it? Well, they would go to it because they'd basically close this in distribution, and if they do that, reject off some of these areas and maybe complete that move. So just careful of that. Prime day, we might see that. Okay, let's have a look at all these obscures. So closing back up above the break level, but not above the trend. Kind of want to see that up a bit higher before the close. So anything above 143 would be ideal. Otherwise, we're in a 50-50 scenario where we could bounce off the backside of the trend and come back down. It's still got that 120 level to retest, 120.6. Okay, trend's going to shift on the 21-day to the bottom. So, and it's going to hard close all of this resistance to the top side here, but that's sort of around the 175s. So, I mean, you can imagine how this could become super bullish very quickly. If the next candle, if the next 21 days is just continuous pump, then this becomes a range control, which is huge. Candle that big for a range control is kind of like this candle down here was, which can send you up to some pretty decent levels. So we'll see. We'll see how that goes. Okay. Back up inside the break level. Nothing is getting hard closed. Got a range level at 157. So that's a bit more confluence for getting rejection around that 157 area, which is where that 2-day maybe, maybe not candle is. That could be resistance or may not be resistance. But yeah, we've got a bit of confluence there. What else we got? 28-day. Nothing's hard closed. 50-50 chance in the 150s of rejecting off the backside of that trend, but nothing's hard closed. Range level. Gonna have a range level. 152. But the candle came from the top side, so it's not hard closing that. Okay. What's this? Back up above the origin. Nothing's hard closed. No range level. No high probability holds. Have we completed this one? Yes, we have. 123. All done. I mentioned yesterday how many timeframes that 123 touch completed. It was just it was huge waiting for that. And you just never know when these things are actually going to come, but it's yeah, there was, just counting them quickly. The actual number, I can't remember. I think I said it might have been about 50, over exaggeration. The actual number was 21 timeframes were all pointing at that exact price. So that's pretty huge. So there you go. All of those all got completed yesterday. Right. What do you got here? 48-day. Be good if that just went up a little bit, just because we don't really want to open on the wrong side of the trend. Rejection off the back side of the trend is going to target this origin down here at 109, and it would probably wick through that. But you are sort of seeing here that we've got 3 outstanding targets, and we've got a few of these timeframes that could go and do them tomorrow. As far as prime day chaos, and as long as they bring that price back up within the day, like big fast recovery, then it doesn't actually change that daily range being created at the moment. Okay. We're going to get we're going to get a high probability hold created here. So that's 191.7 or 175.6. Big range because it's such a big time frame, but anywhere between that wick and that body, this is going to be able to reject. It's not going to create a range because it's not closing below 127.529, so that's pretty good. It hasn't tested the 120 level, so it's another level just pointing at 120. It's not so much pointing at 120, but it's another level that can find support at or below 120. But there was a guy in the Discord yesterday who he mentioned that he took a trade on Asta, and it was like a 1-day origin level that he took it on. Now he took it with a limit order, and he did it really, really early in the day, and he actually really didn't want to do it. And when he saw a 6-hour close, he didn't close his position, which he will in future. And a mate of his was sort of telling him not to, and it's going to be fine, and blah blah blah. But he ended up getting liquidated on the position. So if these are really big targets. Now, what happened to him effectively was the level was hit almost exactly at the beginning of the day because we just had that sudden pump to the downside or dump at the beginning of the day. If you hit these levels at the beginning of the day, the wick can go right through them for the entire time period of the candle before coming back up again. And it's no different to say this 26th of February 56-day candle here. It hit the break level. It can spend a lot of time down here. It can spend 55 days down here and then come back up on the last day if it wants to, and then still close above that break level. Right. So likewise, if this next candle does, or if any of these high time frames test this 120.487 level, do not just enter on it because they might come all the way down for 55 days before coming back up, right? So you kind of have to find whatever is the lowest time frame support that exists at that level, and then that will give you a bit of an idea about what could happen. Now, the bullish side of that though is that they can just tap it and dump, or in this case tap it and pump, and then you might be left out. You might seem like you're feeling left out or whatever. But you're almost better to see it hit it, go up, create like a 4-hour hold, or at least create some kind of low time frame positive ranging, and then re-enter, rather than just take the level and watch it come all the way down to, like in this case, this is an untested range trend, down here at 49 bucks. This is another one here at 66. Not saying that that's what it would do, but it could, so just, don't. High time frame levels are not to be just entered on as if they're going to bounce instantly. Okay. Low probability hold getting created here. But we're also going to get a range trend. Range trend will be starting at about 124. Hold will be starting at about 147. This could create a dump and then a push back up. Low probability because it's only engulfing the body, right? So that's what makes it low probability. It's also moving the trend. Right, so this is something else got to take into account, is that trend goes there. So technically the thing that can stop a hold level from playing out is a trend. So there will be a range trend at 124, there will be a standard support trend at 130, and there'll be a hold level that didn't engulf the wick, can't create a range, and is at 147.9. Could you get a move in there? Absolutely. Could that be an amazing thing? Like if they pump to 147 and then dump down to the 130s again to take out all the people that have chased it, just to bounce off the trend and head up to the top side of the trend at 172? Absolutely. That's the kind of shit they do. Oh, sorry. Probably get a bad flag for saying that. Anyway, voila. That is our moves. There's nothing there. Low probability hold. No move of trend. Hasn't lost the uptrend though, technically. So candles on it. Still got a range trend at about 168. That could be problematic. Okay. So lucky that didn't create a range. So that's an origin rejection at the top side there. If that had engulfed that work, 76 bucks is where that would have gone. So thankfully that didn't do that. Right, and just to put stuff into a wee bit of context, this is one of the closes from the other day. We created that range trend across the bottom there on the 82-day, and as you can see, we're currently finally bouncing up to the number that was haunting me, which is that 148 number. So we don't know whether this hold will hold. The trend may break the hold, and the other support trend that's coming through here, you've got two trends that are going to try and break that hold. And if it gets continuation, it heads up to the next trend, which is that 170 area. So this is just something that plays out over a long period of time. But so a lot of these closes that are happening today kind of just reinforcing some of the bigger moves that are already in play. And that is, they may have finally decided that they have taken enough longs. And we're going to get a little bit of pain for shorts. Right, let's have a look. What's that chart? Oh, nothing. Or something. That is a range. Whatever. Okay, let's have a look at BTC. Okay, so BTC on the daily. It would be good if it closed up a bit more. And there's some reasons for that we will get to when we get to the end of the higher time frames. But this is entirely capable of creating the range we need. The levels make sense with the origin support and resistance levels, with the break levels, and even right up there to the topside origin level at 114k. And yeah, I'm saying at 114k. So 94, 101, 107, 114 would be the range levels based on this daily candle creating a range. To do it, it's got to get over 95 or 94.483. It doesn't have to do it today, but it needs to get over it. And it needs to do that without further distribution or any further origins being created. For it really to truly become a range, we need to not go below 86,266. So sweeping liquidity down to 88, fine. Take the longs all the way down to 88. Take them down to 86,500 for a week here. Doesn't really matter. But don't go to 86.266 because if it taps that level in the next day, it's not an origin level. It's not the creation of this as a hold for a range. And therefore, the rest of this range is pretty much invalid until the next start of the process. So that's where we're at with that. Also, just a close over 92.959 could be quite explosive because that is technically an origin level to the upside. So if you got a close over that, that could just create a pump. And that would be the kind of liquidation pump that would just likely sweep through these trends and kick off a BTC move. Right. So the 2-day on BTC actually looks a little better, apart from the size of the candle is absolutely tiny. You've actually got a 2-day range from the looks of this. Yeah. So we had a break level. It was hit here. It was made into an origin level by this close. They didn't touch it with the bottom of that wick. Cheeky. If they close over 91 point... Yeah, if they close over 91.711, you've already got a 2-day range. So it'll be up over the top of the trend. That is roughly in line with the retest of the broken range. Don't really like that level. These levels don't really line up very well. They're all, yeah. But that's already tested. They haven't tested the broken range, but the hold is already tested by that candle. Yeah. No, I don't really like those levels. But technically it is creating it if it closes over there. All right. 3-day close today. No hold. No 3-day range. I mean, basically, this is just still in the prior 3-day range because it never hit the origin down here. So the origin level for the prior 3-day range is 76,562. Yeah, that's still really just up inside that level. Not very clean. That's nothing much on the 4-day. Back up above trend. Tested the origin level, not creating a range. This is creating a trend break. So a 6-day trend break will shift the topside trend and start to target the hold. So if it closes where it is, it'll open on the correct side of the trend. It's back up above the support trend. It's bounced off that origin level at 80, just down around the 80s. Regained the trend, broken the downtrend. First hard close resistance is 98, and the hold level that it's going to try and target is 100 and between 106 and 108. So that's different type of trade. That like it's more of a trend break to target hold, which is more of a long-term play. It can go sideways, it can go down, whatever, but eventually they tend to go up. Okay. Just not too much going on there. So this hasn't lost the prior range. It's just bouncing off the one effectively. So yeah, 195, sorry, 95, 195, that'd be different. 95.5 would probably be the next target there. Then 104. This is just bouncing off an advanced hold level. 93.7 is still the target for that. Still in play. That's a high probability hold level. It's just pushing up to 95. So I mean, this has been down in the dumps for quite a while. This candle, and you can kind of see how they can stay down for such a long time. But this is a high probability hold. It's been down inside of it for 14 days, bouncing along, capitulating everybody. The target for this is, and always has been, 95.3. So it's most likely just going to head back up there. The only problem with this is it is closing under the interior trend and closing under the range trend. So, and it's failed to move back to the range trend. So there is a pretty high probability that this taps at 95 and then does have some kind of rejection sweep based on that. So if it can close up over 92 or 93 for the day, preferably sort of like 93 to get that into a yellow candle, that would be very bullish. But as it currently stands, maybe rejection in 95s. Okay. Weekly is just pushing through resistance. And the monthly is doing what it should, finally. So we never lost the monthly range, and we started from the top side of the midway point there at about 89, and we went down for all that time. We came back up, we closed over top of it, they went and swept the liquidity. It's pushing back up. This can keep doing this all month long, like, to be fair, but it started above the level. It should be going up. So looks like it finally has taken enough longs for the meantime. Okay, let's have a look at these obscure ones. Getting back up above the range trend, perfect. So that's good. We want to close above that. It's breaking all of these trends at the top side. Everything goes kaput today. So they can be retested. That's a reason to go up. but at the same time they move to the bottom of this wick, which means it could dip down to tag it again and then bounce. I think this is already met, so this was a high probability hold. It's already met its minimum obligation to bounce back to 88.3, so that's all done now. Don't try to trade off that again. There will be a range trend introduced as well. It's all going to be quite low down though, so what this means is that there will be increased support in the form of all of these topside trends that are going to move to the bottom, and things like these new range trends. If it does dip again, you won't have the hold level, but you will have other types of support that's sitting there. And closing back above that range trend, that's positive. If it was to bounce, it would be looking to target, something around this 100k area or above, being hard close levels from a blue candle. If it closes over 94 today, excuse me, by some miracle pump in the next 1 hour and 34 minutes, then even more bullish. But kind of, there's actually positives about closing blue. Like, we close like this, we move trends, we create range trends. We close yellow, we don't. So there's things about this that just sometimes it's good to close down. Okay, high probability hold, pushing to 95.3. Keep going, do your thing. That's probably just going to open the next candle and keep going up. Nothing's hard closed up there until you get to basically 108. So that hold's done. There will be a range trend, more support, flipping to the bottom. Normal trend doesn't move. It's kind of failed to close below the second level of the distribution range. So that's kind of shows failed distribution. More in line with what a retrace would be rather than a trend reversal. Trend reversal, it'll be down here at 68. So that's a hard close level here at 106. So it looks pretty, yeah, it looks like it's failing to distribute. Next candle can't break the level either. So even if they do another dip, even if they try to sweep the longs again, like new longs, it can't hard close it. So, okay, 96k high probability hold. Sorry, low probability hold. Below the range level, we got high probability hold on the top side at about 100 and anything between the wick at about 108 through to 111. Overall, from a lot of what I'm seeing, I don't know whether or not it's going to get past 108. As it goes back up, it may, but 108 might be it. So trend shifting to the bottom side, could wick back down. Let's see, trends go there. Revisiting 85, 86. You don't like, that's the thing. Based on the daily structure it's trying to create and some of that other structure, you don't want it to go down to 85, but it may go sideways for a bit and then tag this trend at 86 400 or just any number above 86 200 is still kind of pretty okay for the overall structure of everything we've just seen. Restore your connection. High probability hold. So this wants to go to 107. It can flip. There's a couple of levels that can flip. So one of them is the body of the candle here at 95.7. So because it's going to close under it, it could turn that into resistance. So that could be bearish. The other one is the wick, which is about 99.4, so it could turn that into resistance. It's got the backside of the trends at 102 and the backside of the other trend up at about 111. But if this just plays out as per normal, it will be heading up to 107. It'll also get a range trend today. So if it tries to flip bearish, it's got new support forming down at 81 again. could double bottom, could sweep, something along those lines. Yeah, and it's ones like this that are the ones that sort of tell you that we may get a blow off top, So this is capable of creating a range. It engulfed fully, including the wick. It bounced off the one. It closed above. It didn't hard close, but it did get above. The 1618. This, if we can get a close up above here, is a 136, 159, 182 range. So it is possible. We got going on here. Nothing much. It hasn't lost the trend. New candle will open on top side of trend. It could bounce off that. We've got a high probability hold level. Starts at 107. Maybe 107 is a better idea than 108. Just looking at some of the stuff. We've been looking at 108 now for such a long time that maybe the consensus is 108. 108 was the weekly breakout level for BTC that led us to the all-time high. And so you'd think that since it's been lost, a retest of it makes a lot of common sense. Even if we are in a bear market, like a retest of that level makes so much sense. But that's the problem. Maybe it makes too much sense. And therefore, maybe this 107.2 level is going to be it. But somewhere between 107.2 and 120, if price gets back up into there, it will reject. The other place that it could reject, although it's not hard closed, is just 95.4. So now 95.4 is going to have a fight with the trend because it's going to be above trend. So these two could be a interim move, maybe they push to 95 and then they sweep back to the trend. It all sort of depends on how many longs pile in and chase it, as to whether or not they just hit that, bounce down, go back up. The most bearish scenario here is that they come down and tag this because this is capable of creating a range, right? So yeah, the most bearish scenario is that they come down and tag that 76 level off that. Oh, old candle colors. Range trend. Oh, OCD. Just got to fix this. A very smart man who does a lot of graphic design gave me some hex colors, which are way, 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 way nicer to look at. That's one of the codes if you want to copy that. FFD319 and what was the other one? And 00577. Okay, much prettier. So this is just going to get a range trend and it's going to form a high probability hold. And that's going to be 104.5 and 98. Now it's so far it failed to create a range, so it's pretty likely it'll get to the 98 if not the 104. Don't know if there's any trends changing. I'm just going to redo this really quickly. This is before we had all these nice cool toys. That makes life so much faster. Yeah, there's no trends shifting today. So there's a topside range trend there, 150. That'll reject. Yeah, don't know about this. So some of this kind of price structure is actually kind of indicative of lots of moves still to come, you know, up, down, up, down, up, down, creating support at higher prices than previous, up facing range trends, but creating lots of different high probability shorts to the upside, but not range creation shorts in a lot of cases. So it's just maybe the market is going to continue. Who knows? What we got here? Yeah, maybe we just haven't hit the top. So this level that it's bouncing off here, this is the actual range base from down here, from the June 24 range that was created. The top for that range is 146. If it moves to 146 in the next 84 days, it smacks into that topside range trend and rejects. It's kind of almost perfect for a top, but we shall see. There's definitely bigger stuff in play this time on BTC than what we had in the previous cycle. Like if you look back here, there's just none of that existed. Nothing like this existed back there. It's definitely fair to say that this cycle is different structurally, but whether that means we go higher or not, I don't know. You can make up your own mind on that. Or just keep following me and we'll talk about it every day. Okay, and this is what I mentioned right at the very beginning. This close is just a pain. It's right on the line at the moment, and you can see they always do this. Like every single time we get close to a daily close, there's always just a real on the fence time frame that's either going to just send it down to the bottom or it's going to push it up. So what makes this a high probability hold is whether it closes above or below that wick. So the current price on Bitcoin is 91,652.6. So that's 652.5 now, 54.7. This wick is 91,629.9. So it's almost a rounding error. It's so close. So if it fully engulfs this candle and rejects, then you might see an instant dump. So just open tomorrow and down we go. You might see a retrace back to the body. They might pump up into the body, right? That's the thing. They can do that. They can pump up into the body, and everyone might get really, really euphoric. But the fact that we started from this point means that at some point they are going to roll over, and when they do, they're coming down here to 74, or 72, one of these two levels, depending on whether they try to create a downside range or not. So that's what we've got going on there. Now, just to put it in perspective, this same time frame has a move in motion to 105. So if it got back over the opening of this hold, which means 93,570 before the end of the day, it's more likely it's just going to keep on moving up to 105. Yeah, it could wick down, it could reject, it could bounce off the backside of this trend at 100k and do a sweep and all that kind of stuff. If liquidity builds up, then they'll take it. They've got the ability to do that kind of thing. But yeah, so 93,570, 105. This is already in motion. This is already the sweep of the liquidity for that. But at the same time, oh, and by the way, just putting it out there, it can still move on to create that range. And that range sees a very high price for Bitcoin. It can still do that. So, yeah, or we get a low probability hold, potential to go to 74k, trend could stop it, that just means a double bottom around the 80s, or we get a high probability hold that can create a range down to 72. That tags the bottom of all of the weekly, monthly type stuff, like it's a level you don't really want to head to because it's going to be a pretty nasty level. But what's different about this cycle is you've got this. Okay. If this breaks and goes to 72, it's actually only retesting this range, and it can then still go back to 155. So that's where this cycle is different. Yeah, so watching that one for today for sure to see whether or not we get a move down. If it comes down into this level down here around anything between 72 and 64, it's definitely an area that is worth taking some buys, and even if they just end up becoming DCAs for next cycle, low leverage spot, whatever, it's definitely an area where there should be some kind of bounce. Yeah, hopefully they just pump it up and get it back inside that candle, and then we will not have one big high time frame hanging over our heads. All right, geez, this video is long. Let's check out Tesla and MicroStrategy. Okay, so Tesla on the daily is still struggling with that trend and that hold level, so it hasn't really managed to break through that yet. It's not going to break up on the daily unless it can go and at least tag 442.33. So there's not too much to say there. What I actually did a thing in a group today where I showed people some of what's been going on the Tesla chart. So I might just run through that for everyone else here. So this is your Tesla overall weekly chart. Okay. Now, if we look at the distribution, or say the accumulation range, we'll look at the accumulation range that was created by this origin down here at 222. So it's this candle here. That's the range top. And a very long time ago, I said to people, you should probably look to sell something, de-risk, etc. When we hit that, I think I said 465. I might have based it off the top of this thing, but I said once you get to about 465, you should be looking to de-risk. So that was the top of that range, and that's done now. What they've done subsequent to that is they've created a new origin up here, and they've created a new range to distribute. And what has caught it and stopped it thus far is the weekly range trend that's running through here. Okay, so what this distribution range wants to come down to 336.26 on the weekly. The only thing stopping it is basically the range trend from this prior range. Now, if it gets back under that range trend at any point, which is currently at about 387, not only is it highly probable that it will just play out that full distribution range, because that's what happens. Ranges play out if nothing stops them. But kind of what else can happen, unfortunately, is that this entire distribution range can actually get erased, okay? Or retraced is probably a better way of putting it. Like what you saw happened here. So we had this range, it rejected, there was an entire retrace of it. So this is sort of, from October 24 through to March 25, an entire retrace. So at the moment, basically Tesla is trying to make a choice. Its choice is, does it break out the top of the bigger overall range and head off to some new high and create a whole new range? Or does it fail, keep laddering down, break the range trend, and complete distribution down to at least 336? Now, if we look inside this area here, what we don't have is we don't have any origin levels. not until we get to 222. And 222 is already tested, so then you've got the one that created that range, which is, that's kind of been used once. It hasn't been retested, so maybe 212. Then you've got the one that created this range down here, which is in the 160s. You've got a break level here, which could be converted. That's about 182. Okay. And you've got all these other various break levels in between. Now, any one of these break levels can polarize and become the origin to create the hold, to create a new range, to continue the price, to move back to the upside if it keeps going down. Okay. So, but what I think people probably need to pay attention to is this level down here, this 182 level, because there is a high probability hold here. And these things are just what are there to bite people. So we had this one back here, and it was on the 10th of November 2021, and it got created with 2 candles. It rejected, and it gave continuation to the bottom of the range, which was 105. Okay. We have this one, and this one's even cleaner. It's a very clean. Okay. It was created off an origin, justified by this candle here, and then price has gone on a lovely euphoric pump to the upside. Now, yep, it could continue to the upside. It has things like, let's see, a range trend through here. That could protect it if it comes back down. Maybe stop it going further. But typically these things will play out one day. Now, when they do play out, the minimum bounce for that and is this 170, sorry, go off the body, is that 182 area. So we know at 182 we have that break level that could create a base for a daily range and send the price back up. Just like we had Sol at 123, just like we had BTC at 76, just like everything else. So the structure on Tesla has got this trap just kind of sitting in wait. It's already an active target. It's just really waiting on an occasion, So for people who are holding it, really, really long term, this break level, this candle, you need to see this candle in the next 28 days flip yellow. Okay. If it doesn't flip yellow, you're not breaking the break level. You've already got a hold level created off it. This is just one big sweep of liquidity. It's just bringing in people who are buying. People are offloading. Okay. And in that time, if this thing doesn't close yellow, you would expect that you're probably going to get a move back to about 182. Okay. So that's sort of what I've been looking at on Tesla, because I'm sort of hoping Tesla goes 24/7, and it'd be really nice to actually, maybe buy some even. Great company and all that kind of thing. It'd be a good stock to trade. It moves heaps. I sort of am struggling a little bit with just buying it and holding it, just purely because I can see how it can go from $400 to $100. I can see how it can, how it could potentially sweep. We've got this downtrend here. Even more so, to be frank, if this candle closes blue, doesn't reaccumulate to that interior trend, and therefore doesn't break this break level, and with this hold already in play, high probability hold in play to come down here and target 182, and with the daily confluence for 182 to be a good level to actually have a reversal at, if this thing doesn't touch these trends, they become polarized, they become bigger rejections, they sweep those trends, they take that liquidity, and that's the final blow off top and then the dump. Okay, so just, yeah, it's there. I just feel kind of dumb if I didn't point it out. As for the current, just shorter term stuff, the daily's looking a little weak. The weekly hasn't quite, like if we look at the weekly hasn't broken the downtrend yet. It's a blue candle. You will potentially, if it closes blue, you'll get this interior. That gives it another shot at trying to move up. If it closes yellow, it breaks the downtrend. That's positive. But like you know from watching these videos, even if it breaks the downtrend, if the wick's too long, it just shifts it to the top and it can give it another reason to reject. Where would it reject to? Well, it would reject back into the hold. You know, it did create this as a high probability hold on the weekly. So, but if we look at, you know, to get range creation, we need to be hard closing weeks over that, 156. To as a high probability hold, it only offers a lower level. So like it could come back to 406 or below and then go back to 419. So this is not 100, and even right now the candle is just kind of below that range creation level, as if it wants to close under it and maybe reject back to break the hold and continue down. So yeah, I guess I'm just saying Tesla is definitely 100% at the top of its weekly range. We know that, and it's just now a case of, does it break it and go up, or does it reject off it, go down, or does it sweep it on the higher time frame and then have an epic dump, which is also absolutely possible. And these high time frames, they can sit there for a long time before they play out. So just, it is there. You now know it. Right. Let's have a look at how this 3-month thing on MicroStrategy is going. If Bitcoin's bouncing, I'm sure this is too. Too many charts. Okay, yeah, it's bouncing. Surprise. Cool. It's really just doing what it should be doing. So yeah, that was range top was swept, prices come down, testing the bottom of the range, bouncing. 201 to 219 are the obvious places for that on the 3-month. And kind of like what you've just seen with BTC, it started from up high in the range. So if we look at this, we started from above. So closed under, went back up, rejected off the upper pivot. So for those of you who have seen how these ranges actually get formed, that candle there got stuffed by this one because it closed just under the wick, right? So that was never going to be able to create a range. This was the one controlling the range. This was just a epic sweep straight off the top, euphoria, blah, 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 liquidate shorts, down it comes. But then it did continue. It closed over the middle pivot. It pushed back. It tested the top of the range properly. That's what you'd expect to see. And then, unfortunately, it couldn't hold it. It couldn't hard close above the level 3 and get you a proper candle in there. So it came down below. We had a hold level here. It bounced off the medium risk sort of hold level. It bounced off that, tested the pivot, dumped, back to the origin, or back to the basically the hold of the range. So this is the control candle, and 174 was sort of like the expected area. Now, where this becomes bullish or bearish, it's bullish in a way because the dump started from above 292, so retracing back up to 292 is very, very possible. It has kind of a minimum obligation as part of the testing of the base of the range to at least come back to 219.11. If it doesn't get above that in the next 28 days, then yes, it can reject off the backside of that, break, and this just gets hellishly bearish. Like this token can go this stock can get very bearish. If it gets above that in the next 28 days, then you could argue that it's pulled its way back up into the bottom part of the range, and then you've got your 219 to your 292 is sort of your to test the pivot. If it gets above the pivot, then there's really not a lot of reason why it shouldn't get back up to that top part of the range to retest that. There is this good old break level from back here. This is half the problem actually as to why it dumped so badly. This is Jan 2000 break level on the 3-month, and they did a beautiful job of bringing it down underneath it and rejecting. So it worked up and through to test the pivot of the current range, and then obviously went, we've come from the wrong side of resistance, let's go down. and down it went. So yeah, we lose that interior trend today. That could, at the end of the month, we could trigger a retrace. It's very possible. Doesn't lose that one, so therefore you've still got support if you can get back up over top of that. But yeah, it's really kind of like December is going to be a do or die for this, really. It's got to get back up and recover some of these levels. Yep, or it's toast. The 1 month is bouncing, but it doesn't mean anything unless it creates an origin and gets over top of a candle. It needs to create a hold. So let's look at 1 day. So the 1 day has bounced off a break. Yeah, so the 1 day's bounced off a break. So it needs to create a hold out of this candle, basically. So if it's gonna really start to reverse, so to create a range hold, it needs to be over 187, which I guess it can't even do now because the market's closed. So it's probably not. Yeah, it's probably not really capable of creating a daily range out of there. And it's got that candle up there to smack it back down again on the daily, so it doesn't look so flash. See if it. Yeah, it didn't manage to create a 12-hour. So it's not holding up as well as what Bitcoin or Solar as far as potential reversal from this area, but it's yeah. I wonder if it's got a weekly. Yep. Doesn't really have a weekly. It's got a 4-hour. That's about it. Assuming that bounced off a break, which it did. So gotta love those indicators. Yep. So bounced off a break, bounced off a hold. Sorry, bounced off a break, created an origin, created a hold. So this is all it's got. Okay, at the moment is this range. It's tested that, so that's not going to stop it really. This is all tested by this. This is a legit level of rejection, and if it works through that, it'll hit this hold. That gives you your 219. So you have 4-hour structure that has been created to meet the minimum obligations of the 3-month chart, but yeah, you don't have anything bigger, which is kind of why it's really imperative that the 3-month actually just closes properly, because there's no daily, there's no weekly, there's nothing. That this whole thing has been held up by a 4-hour range, which is not what you want to see on a multi-million, billion, whatever this is, stock. You don't want to see it being held up by a 4-hour range. Okie dokie, that's us. We'll get this video up online. Like, subscribe. 1 hour and 34 minutes. Wow. Okay. Yep. That's a lot of time on not trading. Anywho, hope you enjoy. We'll catch you later.